So let's talk a little bit about what makes real estate investing, and just to narrow that in, because real estate investing is a rather broad concept. There's really a whole lot of different types of ways to invest in real estate. I don't think it's a bad idea, although I can't say I particularly love it. So I'll give you what I think are the top five things that make real estate investing a really good deal. And then at the same time, maybe the top five things that people don't like to tell you about when it comes to real estate investing, but you should also stay aware of. So if you're in this space at all, you'll probably know of an acronym called IDEAL. IDEAL stands for income, depreciation, equity, appreciation, and leverage. Real estate doesn't have the volatility that you would have than with the stock market as well, where one day the market's doing great, so your accounts are up, everyone's very optimistic about the future, no worry about political turmoil or the like, no geopolitical wars or events taking place, and so it seems everyone's you're able to sell your stocks for good prices. And then if there's some large economic pandemic or concerns or worries, or a war does break out, these tends to shift to your prices, and you could lose value rather significantly in all of these type of alternative investment solutions that you tend not to see in real estate. Like, as best as what you could sell your house for 1 week ago is the same thing that you could sell your rental property for today versus what you'll sell it for 1 week from now. It doesn't tend to change very much. You don't have to worry about those jostles. Although real estate isn't guaranteed to go up, and it's not guaranteed, it has the possibility of going down, and it could stay flat. So like, in one way, you don't necessarily see, the ups and downs of the market, but it doesn't mean that they're not still there, and there isn't a risk by any means that you're taking with real estate. But what are some of the things that these real estate folks who love it don't necessarily tell you? Well, one, a lot of things hinge on you purchasing the property at the right price. Real estate tends to sell at what's called retail values, but you really need to buy it at wholesale values in order to make this work. And what do I mean by that? Is like, well, the competitive marketplace, by and large, for single family residents in particular, is just another family. It's someone else who might want to move into that property and call it or make it their home. People have a tendency or a willingness to spend more for what could be their future home than what could make maybe good business sense. And what makes a real estate investment is that what has to drive it is that purchase price, and then the running of the numbers, and effectively, for the price that I'm paying versus what I could rent it for, and all the costs that come in between these two, like, does this still make sense? And what I will tell you is, commonly real estate, as it's valued on the fair market value and in the open market, tends to be priced too high at a rental unit arrangement as a business. And so you can't just simply go and pay someone their asking price. They're probably asking too much for it to make good business sense. And that means you have to find good deals in real estate. And so there's a component to real estate investing. They call it passive income, but I don't really think it is. And technically it is. Like, that is how it's seen for what it's worth with the IRS, but I don't think it's passive income. It's less passive. It's more passive than you showing up to work every day and doing your job. But there's still a lot of work involved in making a real estate investment work, not just simply in the point of acquisition and acquiring the property, but more so, over the care of maintaining it and making sure that it continues to function the way you want it to function. Like, you're putting time in. And so, like, yeah, can you get higher returns with a real estate investment? Absolutely. But guess what? You're also working more for it. So you better be getting higher returns, because if you're not, like, what the heck? It doesn't make a whole lot of sense for you to pursue it. So one is that real estate investing requires more legwork, more diligence, more oversight, more commitment. You should really be seeing it as a side business, a small business, something that you're doing in addition to your normal work. And a big question you should ask yourself is, do I really want that? Do I even need that? And are the returns that I might get from that, are they worth the extra work and the hassle for me? And if you're like a lot of our clients who are high income earners, the truth is you can make pretty good money just simply showing up and working a few more hours at your day job. And so if you're just wanting to make a little bit more money, you're getting a little bit more in return, like, maybe you should just go and show up to work a little bit more and resolve it that way. Like, it's probably the most straightforward, direct way to get that higher return and that better payoff than trying to do it through real estate. The other thing that people won't tell you about with real estate is that you have depreciation, yes, so you get to write off the cost of that building. But if you go to sell it, there are likely capital gains to be had if all goes well on that. And when you go to handle those capital gains, what you did just receive in depreciation comes back to you in what's called depreciation recapture. So that tax benefit you got over the years isn't permanent. It doesn't stick around. Could go into a lot more detail as to what depreciation recapture is. I'll have to have a whole other video about that. But depreciation recapture is ultimately an unwinding of the tax benefits that you received. Now, there are ways to sidestep that through like a 1031 exchange, so you don't have to necessarily pay the depreciation recapture. But again, there's more trick in order to it, this investment, in order to get all the tax benefits that are kind of suggested. So you have to kind of be all in. You can't just be doing this a little bit, which again is kind of part of that whole small business mentality. You're not just kind of doing this on the side. If you want to be a real estate investor, you need to be a real estate investor. This is how you want to invest your money. The other drawback to real estate investing, but again, not commonly suggested, is, it goes hand in hand with that depreciation, is that people are like, oh, depreciation is so great. You get to claim all these paper losses that you don't actually really incur, but you didn't have to pay for because they came about through the loan, and you can use that to offset other income. Kind of. Passive losses are a new rule that came about from the IRS, and new in the terms that it came about like in the mid 80s as a way to stomp out people who are using real estate investing as a way to offset other income. You have this notion within the Internal Revenue Code of passive losses, and you can only, when you have passive losses, the only income that a passive loss can offset is what's called passive income, which is a difference or a distinction from what we might call your ordinary income, the income that you typically make from your day job, your overall earnings. And so, you can't necessarily take a loss from a real estate investment and apply that a loss against your other ordinary income and receive a tax benefit, at least not in the year that takes place. Instead, those passive losses, for most people, there are limits to it. It's possible you could get a passive loss. Won't go into the details of it today, but for most people, that passive loss doesn't really happen. It just gets carried over or suspended, and then does eventually get applied, but usually not until you sell that rental property. So, and there's still benefits to having a passive loss versus keeping that loss potentially as what's called part of your cost basis. There are tax benefits perhaps to have that passive loss, but the overstatement of like, oh, you get to write off all this income through depreciation. It's like, well, you get to write off some of that income, or you get to write off at least any of the passive income with that depreciation, but you don't get to write off all of it because you have passive loss limits. And so, it's not as grandiose of an investment approach as is sometimes sold to you. Last comment I would like to have on real estate investing is that it is a concentrated bet. You only are investing all this money and time and focus in just usually a single property that's located in a very specific neighborhood, that's located across very distinct neighbors. It's all subject to idiosyncratic risk, is what we would describe. Any of these variables could change specific to this investment. Could get new neighbors come or go. The neighborhood could change over the years. The tenant, in particular, if it's living in the property, could change, and so there can be a rather huge changeover from month to month, year to year, decade to decade, for sure, in terms of this real estate investment. And you don't have full control over those sort of things. You get some crazy neighbor moving in across your investment property, and they decide maybe to turn their home into a junkyard of sorts. And now your property value is going down because this crazy neighbor, who you can't necessarily evict or have any say over, there are limits, but you are at least limited in what you can do about it. It's now affecting your investment. And if you have just that one investment, like, it's all affected by that individual or that person. And so there can be a lot of exposure or possibility of things going well, but also things not going well. And then I think the last thing I would make, and it's kind of attuned to this notion of a concentrated risk, is that really what makes a good investment, a real estate investment, work isn't your due diligence or your sleuthing around and finding the right property and you're doing all the good work of buying at the right price. It's the tenant. If you have a great tenant, you can do very well with real estate investing, no questions asked. It can be definitely a cash cow. But if you get the wrong tenant in there, especially one who is destructive, who's a pain to evict, or is fickle, or sometimes pays, sometimes doesn't pay, or who knows what they're going to do. Dave Ramsey likes to say they want to go and change their motorcycle engine oil in the living room. and people do crazy stuff like that. That's not too much of an exaggeration. They can just wreck your investment and wreck your hard-earned money and turn this whole thing into one big nightmare. And so, that's not to mention that all the possibilities of things that could go wrong with a real estate investment. I don't necessarily think they do, but things do break, and does need attention and does need to be fixed, and that can be handled through a property management company for sure, but which adds to your expense, and that doesn't necessarily cover all of the cost. That's just someone who's running point on these things to make sure that you don't have to deal with it. But those concerns, if you're not particularly handy, or not particularly aggressive in managing the property, or not particularly keeping an eye on that tenant and able to have a close eye on things, I think this can go sideways for you in a hurry. And so, in all this idea of like, oh, real estate is such a great investment, maybe it doesn't turn out to be so great. And so I think it's a great investment at the end of the day if it's a good fit for you and what you want to do. And so if this is just like you get real estate investing, you like the business model, you like how it works, you like the idea of like making money in this way, you're inspired by the possibility of giving someone else a good place to live at a fair price, and it makes everybody work and happy, then by all means, go be a real estate investor. I don't think there's anything wrong with that, especially if you're wanting to be kind of engaged in a small business activity, and this is how you want to spend your free time. But if you're just doing this solely as, no, I just want to do it as an investor, which means I want this to be really passive, and I don't want it to take a whole lot of my time, and I don't have to really work for it anymore when I work for any of my other investments. It's like, well, there are solutions for you in that. Even as just a very passive investor, there are solutions for you. The real estate investing is probably not the right fit then for you, and it's whatever extra returns it might have probably just aren't worth it to you. The other investment solutions that we can find and pursue are probably only a better fit for your long-term needs. So this has been a long video, and we just talked about single-family resident rentals. I mean, there's really so much to talk about in this space, but people want to know, is real estate a good investment? Maybe it's a good fit for you, and if it is, well, that's great. And I hope my video has been able to shed some light on how it could be a good fit for you. And I would say, if you're really handy and you like to get in there and you like fixing things, and maybe you're looking at some ways to get into real estate, like a multifamily residence, any one of those where you buy one unit and then rent out the other units could be a great way to get going in real estate. You're living in one, you're taking care of the other three, you're right there on the grounds. You're usually living in a smaller unit than what you would be in a single family residence, but this could be a really good way to get going in real estate investing. So if you're really thinking about this, what I would consider is, hey, think about a multifamily unit, live in one of the units, and then rent out the others. I think that's a great way to invest. And if you're looking for some direction on this, we do real estate evaluations and calculations and run the numbers for people. So if you're looking and you're considering and you're like, I wonder what what we would think, well, we can give us a call and we'll have a chat and we can help you out in that way. So anyhow, thanks for listening to the video today, and stay tuned for future videos. Hope this was super helpful for you.